Here's a question that I spoke about earlier on, and it so happens that we're dealing with it here. It says here, state 3 advantages of EFTs. What are the advantages of EFTs? One, let me just see. And the second one was, explain 2 reasons why the internal auditor should be concerned about this. Let's look at our responses. What are the advantages of EFTs? Obviously, less fraud, right? It's convenient and easy to use, obviously. It can be done from the business, not restricted to business hours. That means if the accountant has the permission, has the security codes to use. Now, obviously, it's just not going on the system and making a payment. No, obviously, there needs to be authorization to ensure that the person that's doing the EFTs has authorization to do so. So please, guys, remember, even with EFTs, we need to have the proper internal controls in place to ensure there's no abuse of the EFTs as well, right? It is time saving, definitely. Your payments and receipts are instant. As the account is updated immediately, the account is reflected. Obviously, you're going to get some instances where you are told the payment may only reflect after 2 days or whatever the situation may be. But generally, it is done from one account into another account. There's no long queues to deal with. So obviously the safety factor, and obviously it is cheaper than bank charges, because remember, with every check that you write out, there are charges that go with the check being processed. So these are your advantages of your EFTs. The other one that we had was, what was the problem? I think Jeanette was doing too many things, right? So, too many related job functions given to one person. There's no division of duties. There are no checks and balances in place. There's a possibility of fraud. Like I said, yes, even with your EFTs, you must ensure division of duties. Somebody in senior management must authorize the EFTs, right? Or there may be 3 people involved to release the EFT. One person processing it, the second one verifying and checking, and the third one maybe then doing the release of the EFT. So obviously, remember, part of internal control to safeguard the assets of our business. If you have one person doing all of that, that person may be negligent, right, in performing her duties, right? Or there may be lack of supervision. If there's no supervision, it can result in abuse. Payments cannot be made on time, right? And obviously, if she's absent, there's a lack of continuity, because obviously, if she's ill for whatever reason, there must be somebody else that can process the EFTs. So ideally, when you're dealing with a bank reconciliation statement, 1, identify the differences between your bank account and the bank statement that you are receiving from the bank. Identify where are the entries reflected, where are they not reflected. In other words, take the information that's appearing on my bank statement, right? It is in my bank statement, update my cash receipts journal and my cash payments journal. So in that way, I'm taking information that's not appearing in the CRJ and CPJ and updating my 2 journals, right? Okay, there may be information that is in my bank statement that may be incorrect. I'll deal with that just now. So once I've updated my CRJ and I've updated my CPJ, I now look at information in my CRJ and my CPJ that's not in my bank statement, and that grade 12s will go to my bank reconciliation statement. Why? Because my bank reconciliation statement, remember, your bank reconciliation statement is an extension of your bank statement. So your final balance in your bank statement is where you start off your bank reconciliation statement from. So therefore, your bank reconciliation statement is an extension of your bank statement. Now, what will go into my bank reconciliation statement? Remember, outstanding EFTs or outstanding checks, then your outstanding deposits. Remember, they're appearing in my CRJ, they're appearing in my CPJ, they're not in my bank statement. Therefore, enter them into your bank reconciliation statement, right? And then finally, any errors that have been made by the bank. Remember, the bank can also make errors. These errors will be corrected in my bank reconciliation statement. Either a debit incorrect credit or a credit incorrect debit. Remember also that any errors made by the business, that means if we have made an error, we will correct that error in our cash receipts journal or our cash payments journal, and these are your checks that are either overstated or understated.